So, hello everybody. A few people here, but let's have this. Okay, closer. So, hello everybody. I'm glad to be here to present some of our research. My name is Giacomo Vella, and I'm the director of the Blockchain and Web3 Observatory. What is the Blockchain and Web3 Observatory? Is a research group inside a bigger research team at the Politecnico of Milano, the main technical university in Italy. And we have more than 50 observatories about different digital innovation, digital technologies, for example, of course, blockchain Web3, but also AI and other stuff. And more than 130 researcher, professor involved in this. We are not purely academic researcher. We are, let's say, trying to connect the business world of traditional companies, startups, and whoever is working on the blockchain and Web3. So you can see some of the companies that are part of our community, that are the traditional, let's say, not Web3 native companies. We have a big research group with people working in researching Web3 and blockchain business application. And we focus not only on stablecoin, that we know is the main topic of this event, but about every, let's say, a lot of the application that can be done with this technology. Try to cover every topic and try to connect with companies and try to understand how are they using this technology. And of course, we focus also on stablecoin as one of the main use cases for blockchain and Web3. Okay, so let's take a step back. So not focusing from the start on stablecoin, we have a different perspective from maybe a lot of the speeches that are in this conference. So we are not purely technical. We are not purely focused on stablecoin, but we start, let's taking a large road to get to the point. So let's try to understand the question from which we start. That is, how has the blockchain industry evolved in the recent years? Okay, let's take a large and then get to the point. So these are some data that are coming from our research about how traditional companies are using this technology. And this is something that we do every year since 2016, trying to understand how companies are actually adopting this technology. This is something that we do by scouring the internet for news, project, announcement for project, and this number are related to POC or live project developed by traditional companies around the world. So we don't focus on startup, but as you can see, the number of projects using blockchain and Web3 is growing also in traditional companies. Also, when we expect maybe the hype to be over for traditional companies, we see still a growth in the adoption of this technology. Also, we have a focus also on some of the biggest companies in the world, like the Fortune 500 global in here, and we see that many of these companies are using this technology, are trying to create projects that are using blockchain technology in the Web3 area. For example, 153 big companies in the Fortune 500 are actually doing blockchain projects. And what is interesting is not that, I mean, the gross number of them are doing this kind of project, but that the 34% of them, of the projects that are done by these companies have been done in the last 2 years. Okay, so it's a very active community of traditional companies using this technology to create projects. Of course, talking about blockchain project nowadays make no sense because it's a general purpose technology that is evolving in very different directions. So we try to have some category to understand what kind of project are companies doing. The first one, and it is the one that probably is of our interest for today, is the Internet of Value, the so-called Internet of Value. So all the project that involves the adoption of cryptocurrencies, stablecoin, and CBDCs for the one that are live right now, to exchange value in some way. Then we have a lot of other projects that are the one mostly blockchain for business. So all the projects created by companies in order to be more efficient, to use blockchain to replicate the system, to replicate their processes, but not really to innovate. We saw many projects in the trade finance, supply chain, in the years in the past. Right now we see less project, but it's an actual thing that companies are doing. And in the end, the project that maybe are closest to the Web3, the decentralized web, in which we have the most innovative project developed by traditional companies that are closest to what we see done by startup and maybe new crypto native companies. Many things happened in the recent years. This is just starting from 2023. Different announcement, new project. This are just maybe the one that make the news online. So of course we have something that is more from a regulatory perspective. Some big actor in the finance world that is entering the crypto industry, or that is doing new project in the crypto industry. Some of them are launching their own stablecoin, for example, PayPal. For sure, we saw the SEC approving the ETF spot for Bitcoin and Ether. So a lot of new project, but when we have a look on them, we see that the majority of them, the majority of the news that we see, not focusing on a specific industry. So we are not focused on the financial industry, but the majority of the project are focused on what we call the Internet of Value. So creating new stable coins, accepting cryptocurrency, creating a financial instrument on traditional cryptocurrency, or developing CBDCs or projects that are linked to CBDCs. So let's focus 1 second on the Internet of Value project. So we analyze all the projects done by traditional companies, and we try to say, okay, what are the projects that are mostly Internet of Value, so that are using digital asset in order to exchange value, for example, stable coins, or what are the projects that are blockchain for business? So try not really innovating, but try to make more efficient some process that is already in their traditional industry or traditional. And we see also the growth in the years of traditional companies using this kind of instrument. And what are the different paths that these companies that we see in the Internet of Value world? For sure, a big step towards legitimacy and regulation. So one thing that probably is making the market grow for this kind of Internet of Value is the regulation. So we know that in Europe we are having MiCAR, and it will be live fully as a regulation by the end of this year. We have a lot of companies and banks, crypto native companies that are being regulated by MiCAR, being authorized by MiCAR right now. And for sure, we have some big signals also from the US, like the SEC approving the ETF for Bitcoin or Ether. So legitimacy is growing around this instrument. It's not only something that some wild startup is doing. It's something that is being more and more approved by the regulators. For sure, there are projects that are linked to the CBDCs. So a big competitor maybe to stablecoins. In Europe, we have the Digital Euro project, but in other countries, we see many different CBDCs projects. And for sure, this is something that is growing. We don't know if it will grow for good or for bad, but it's something that is in the picture. And then many different stablecoin projects developed not by maybe the startup, the DeFi protocols that we see here today, but also by traditional companies, by traditional banks. The last news were Societe Generale developing more is URCV, so opening the whitelist and leaving the exchange of his stablecoin also to the market. We saw PayPal launching his own stablecoin. We see a lot of interest also by traditional banks in creating the stablecoins or deposit token, some kind of instrument to exchange value using this technology. So the other question that we have is right now, okay, the Internet of Value is growing. The adoption by traditional companies is growing, but why are we focusing on this kind of technology? Why the Internet of Value is relevant? Today, we also heard different speeches. The discussion about this instrument, about stable coins, mainly is focused on the financial stability. So if there is some reserves, if there is collateral behind these stable coins, if they can be used as a payment method, how is the custody managed, for example, how is managed the peg toward fiat currencies. So a lot of the talk and the discussion around this topic is on the instrument itself. So how to regulate the instrument itself, how to make it safe and easy to use, or more innovative. But we saw that by talking with traditional companies, with the industry, with financial companies, but not only financial companies, there is a lot of interest in the programmability. Okay, so we are not only interested in how a stablecoin is designed, but actually we want to understand how to use this stablecoin, not only to, let's say, having a new way to exchange money, a faster way to create payments, or an easiest way to exchange value, but actually we see the stablecoins and we see that they are interesting, but we want to know, okay, but how to make programmable payments, programmable money with this, because one of the things that you can actually do with stablecoins is not only make a payment, make a money transfer, but actually linking to what is cool in blockchain, what is a smart contract, the programmability. So the idea is, okay, but how can we use this stablecoin actually in our business? There are two different ways to involve programmability in stablecoin or in this kind of instrument. From one side, we have payments programmability. On the other side, we have currency programmability. So for payments programmability, we have to be able to create some programmable payment, of course, that is, let's say, on top or below the currency. For instead, currency programmability is meaning when we have programmability that is actually developed inside the currency. So, for example, you want to limit the expandability of currency, or to make some time constraint on how you can spend some currency. For the second, let's say the currency programmability can have different problems from a monetary perspective. So we will focus more on the payments programmability. So, okay, we have a stable coin, we have this kind of asset. How can we make programmable payments? Programmable payments are not something that is new, is not completely new. You can do it nowadays with APIs, for example. So in the traditional market, there is already the possibility to create programmable payments without using stablecoin, without using blockchain. But of course, if we are here talking about why programmable payments are cool and why we should be linked to Web3 and blockchain, is because we can have different interesting features regarding what is happening when we link smart contracts to some form of digital money on the blockchain. So, for example, of course, a higher level of transparency, the correct execution that is not granted by a third party, but is granted by the network itself, the fact that the protocol itself allows for this kind of programmability, so you don't have to open some API to programmable different application to do this, and many different other features that can be interesting in order to use this kind of solution linked to a network that allows smart contracts such as blockchain. There are many different use cases that can be enhanced by the programmable payments. Some are, let's say, quite easy. Some other are more difficult. But we can really enable new business opportunities by using this kind of stablecoin, this kind of instrument, not only to exchange value, but to interact with some business processes. For example, the distribution of dividends, the management of subscriptions, in trading, in insurance payment, so insurance policies, the payments of royalties that can be linked to different use cases that can be automated by using this kind of technology. So many different use cases. We can roughly divide these use cases in three categories. So the first one is the ability to do split payments. So one transaction that is in the same time going in different direction to different users, two different users or many different users. And this is something that can be cool, for example, for the dividend payments or for the royalty distribution. So something that allows for new use cases. We have all let's say the process is connected to the delivery versus payment. So escrow account, machine-to-machine payment, trade finance. We have time-bound automation. For example, when we want bond yields, rents, okay? So if you want to pay the rent for something, not only a house or let's say a real estate, with stablecoin, we can automate some of this payment by linking to smart contracts or to a decentralized application, the management of subscription again. But then, of course, having this kind of programmability embedded in the decentralized protocol of blockchain, the decentralized network, we can use composability, linking different programmable payments together, linking different decentralized applications together, so we can enact programmable payments that are happening with a more complex logic. So, for example, in the management of lending, trading, insurance policies, and really here you can think about many different use cases happening if we have a stable coin that is linked to this kind of solution. Of course, this is something that we will see in the future, but this is how traditional companies are looking at stablecoin aside to their financial nature. So they are not interested, except banks maybe, they are not interested in, okay, I want to create a new stablecoin because it's, I want to create new money. They are interested in because they want to create new business case. They want to maybe bring their own business on chain, and they cannot do it if they don't have a stable coin or a mean to exchange payment. So this is really important for the growth of this kind of instrument in the future. For example, when we look at trade finance, that was one of the use cases mainly developed by traditional companies, by banks that maybe wanted to enact new ecosystem of companies on the blockchain. One of the main problems that they had in the past, and one of the reasons because many of these projects fail, we can think Marco Polo, to mention a name, a big project with big banks failing because they didn't have an actual way to make value transaction on chain. So they were doing some project on the blockchain, but then they were doing traditional bank transfer after all the process happened on the blockchain. So stablecoins and instruments like stablecoins are very important for all the projects that are maybe related to trade finance or traditional industry that want to create this business also on the blockchain, but they need some instrument, some digital money that they can use to actually make payments. So not only focusing on the process of exchanging documents, but actually linking some form of payment, some form of money to the exchange of this document and trades. And here you can see also a lot of blockchain for business project numbers. But also when we see other projects in the decentralized web, so also in DeFi or lending protocols, people from traditional finance, from traditional companies that want to use this instrument need to have a means of payment that they can use. Okay, so something that is regulated, something that they see as safe instrument to exchange value, and that can be linked to what is DeFi right now, but maybe in the future we won't call it DeFi anymore because also big institutions will enter. Some of them are already doing it, but they want also something that they can use to exchange payment without touching cryptocurrencies, without touching money that they cannot use because they are regulated or they have problems with financial stability and so on. So this is true also for the more, let's say, innovative project that we see on the Web3 and blockchain ecosystem. Of course, we are focused here in this event on stablecoin, but we see on the market from the traditional finance perspective, the traditional banks, from the traditional companies, really they are looking at two solutions they can see in competition in some way. Then we can argue if they are competing or not. But these two solutions are stablecoins from one side that are growing both in number of different stablecoin, both in their development. So we see also today many new ideas for stablecoin development. Their market cap is growing. Their acceptance from the market, their regulation is growing. So more and more interest in stablecoins. But we have to keep track also of the other side of the room, let's say, that are central bank digital currencies. Many different central banks in the world are doing projects trying to create their own form of digital money, native digital money, so not the one allowed by a retail bank, but something that is created directly by central banks. Most of them are not looking at DLTs, Web3 blockchain. They are doing with traditional instrument, but some of them are actually trying to understand, trying to experiment how to link their CBDC also to Web3, also to blockchain project, and so on. We can see this solution as a competitor. We don't know in the future if we will use mostly stablecoin and CBDCs only for specific task, or if CBDCs will be widespread and all traditional companies will use CBDCs and don't use stablecoins. Maybe they will be together solving different problems. For sure, they could have same feature, same characteristics, of course, coming from different backgrounds, but they both allow for peer-to-peer fund transfer. They both can allow for the maximum level of programmability. Of course, it depending on how they are developed. If we are talking about CBDCs, they could both allow for user control over funds, depending on the CBDCs, if it's retail CBDCs or wholesale CBDC, and they could allow DVP for tokenized financial asset. That is something that is very cool right now for all the banks that are looking at blockchain. They are following a different path. So trying to understand which one will be mostly adopted. From the stablecoin side, again, from the traditional finance perspective, the path is regulation, okay? So they are already highly programmable. They are already used by a lot of actors in the DeFi, but regulation and legitimacy, it will be the path that we will see for their acceptance also by the traditional market, the traditional companies. On the other side, there is a lot of discussion about design choices for CBDCs. So right now we have very few projects of CBDCs that are actually live and used. And for example, the digital euro is not live, is a project that they are developing that we will see maybe in the future years. And they are right now discussing what the design choices will be. So sticking to programmability or the link with blockchain, is the digital euro becoming something that we will use like stablecoin that will allow the connection, for example, to DeFi, to Web3, to blockchain, or will be something that will be completely, let's say, separated by this market and maybe will be used by stablecoin as a collateral, for example. So this is something that in the future we will see. We will see, different choices regarding the geographical area. So for sure, there is a lot of also geopolitics involved in this. So we know that MiCA regulation started, for example, to protect the European ecosystem, the European money. But CBDCs and stablecoin are maybe don't have a geographical area in which they are used. CBDCs probably will be linked to some geographical area. The accessibility, so stablecoin are accessible by whoever. CBDCs maybe will be restricted only to some actor for KYC problems or maybe only to financial institution. We will have to see in the future. Restriction on the use cases. So if I have to make some sort of payment, maybe I can use one instrument, not the other. This is something that we have to see. And also the level of programmability. We will see something that will be, let's say, Turing complete as a programmability sense, or only can be used for some programmable payments. And in the end, let's say that to conclude, these are two solutions to the problem of programmability, to the problem of creating business cases by using stablecoin, by using CBDCs. Maybe we will have a stablecoin prevail in the future because they are faster, they are already in place, and companies under MiCA regulation will be able to use it. Maybe we will see CBDCs prevail, but probably we'll see some form of coexistence between the two of them. So thank you for the attention. If you want to get in touch or exchange some thoughts or get a material, you can follow us, write an email, whatever you want. So thank you.